Tesla having a terrible, horrible, no good, very bad, everything on pace for its worst ever month, quarter, and year. Joining us now to talk about what is going on is CFRA senior equity research analyst Garrett Nelson, who's got a buy rating on the stock and a $225 price target. Garrett, great to have you with us. I assume at this point you stuck with your buy rating this whole time down. I mean, it's down 69% this year. I would assume you think it's closer to the bottom at this point. What is the primary driver of this tremendous decline that we've seen in your view?
Sure. Thanks for having me. So obviously there's been a lot of attention surrounding Tesla's sell-off, but to be clear, this is a broader EV sell-off. If you look at Tesla's competitors, Rivian and Lucid, those stocks are down far more on a year-to-date basis than Tesla. So, we think sentiment has really become overly negative, and the recent sell-off has really been exacerbated by year-end tax loss selling, in our view. But if you look at what happened yesterday, Tesla lost over 11% of their market value in a single day yesterday. And really, what news was there out there, except that they're planning to take little additional downtime at their Shanghai factory over the Chinese New Year in late January. And so we think that's really overdone to see that kind of sell-off on that type of news. And by the way, their China factory is only one of 4 factories that they're currently operating. So we think this is a really good buying opportunity following the recent sell-off.
And, what was remarkable about yesterday's sell-off was the volume behind that 11% decline. So it wasn't just, strange light volume days ahead of the new year, Garrett. It was, 3 times the average daily volume over the past 30 days, which means that there's a lot of conviction in that decline. If you think that it's China mostly, that bit of news behind the 11%, once that gets better, I would think that that's something to look through. But then you still have the outstanding issue of Elon Musk's distraction, the possible damage to the Tesla brand, the high interest rates, which Elon Musk himself tweeted about. I mean, the Y and the 3 are some of the most financed SUVs, EUVs in the market, I should say, at this point. These are things that don't necessarily go away, even if the China lockdown is solved. And we just heard from Dr. Scott Gottlieb earlier. He thinks that, this could be waves and waves of COVID here, which could still be disruptive to the supply chain.
Yeah, we think the pendulum has really swung too far in the direction of fear. And Tesla's not being given enough credit for some potential positives that are ahead. One is we think they could announce a buyback. They've alluded to that in the last few months. Would likely be in the magnitude of $5 to $10 billion. The company's balance sheet was recently upgraded to investment grade by S&P. So they're really in a lot different situation than other automakers, given their balance sheet strength and free cash flow. And the other thing is that their EVs, the lower price versions of the Model 3 and the Model Y, will become eligible for $7,500 federal EV tax credit on January 1st. So next week, those lower price versions will be available for the EV tax credit because of the Inflation Reduction Act. And so, we don't think the market is focusing enough on those things. And, this sell-off has really presented a compelling entry point.
Right. That tax credit is huge. Garrett, great to speak with you. Thank you. Garrett Nelson.
Thank you.